always think about what is that downside. And most of what I've realized is that a lot of the things that we fear in life, or a lot of the things that we worry about in terms of downside, oftentimes isn't that big of a deal. And I think that's probably the biggest attitude for me. Is it's not that I'm willing to take less risks. It's more, I think I've lived my life that way, of not kind of fretting over small things and being able to quantify exactly what those risks are.
Hi, everyone. Welcome to another edition of My Life in 4 Trades. Joining me today is Jeff Dorman, Chief Investment Officer at Arca. Enjoy the conversation. Hi, Jeff. Welcome to My Life in 4 Trades.
Thanks for having me.
So before we jump into your trades, it's our tradition to just have us tell us a little bit about yourself, your background, where'd you grow up, and what were the early years like for you?
Sure, yeah. So Jeff Dorman, Chief Investment Officer and co-founder of Arca, which is a full-service asset management firm dedicated exclusively to digital assets and blockchain. Obviously, didn't grow up or start my career in blockchain since it didn't exist at the time. But, I grew up in Cleveland, Ohio, still a tortured Cleveland sports fan. And went to school at Washington University in St. Louis. And from there, started my career on Wall Street. I worked as an investment banker at Lehman Brothers, and then I went on to be a corporate bond trader at Merrill Lynch. And then after the financial crisis, went to the buy side. I worked for Citadel and a couple smaller hedge funds. And then after that, I got into fintech in the 2014 range, and from fintech kind of opened my eyes a little bit. We'll get into to that as one of my trades here in a minute, but opened my eyes to what else was out there besides this just myopic kind of closed Wall Street world, and from fintech to blockchain, and ultimately starting Arca.
Yeah, and we will dive into that journey and that world of investment banking and hedge funds, and you kind of made your journey through all of the biggest ones during the biggest time. It's a really intense experience. So it is sort of interesting that it kind of becomes a closed wall, I think. Were you always a numbers guy, a math guy?
I was a math guy, but I actually was a biology major at first in school until I actually was really into DNA and genetics until I found out that genetic counselors make like $20,000 a year, and then I had to switch. But I took a lot of finance and economic courses, but also was into language, was into like I said, sciences. But ultimately, math always came easy for me. It was always kind of what drove everything that I did, even, as a baseball player through college, was always into stats and was kind of an Excel junkie. So I think it was probably a natural move to get into finance, although I maybe didn't know it until, got towards the end of my college years.
Yeah. How did you get introduced to it? I mean, was sort of investing a topic that came up around your dinner table, or was it through trying to figure out a job that you were going to be able to make money at? Is that where the intro came?
Yeah, a little bit of a self-made finance guy, in the sense that neither of my parents were financial professionals. Neither of them really enjoyed or even cared about investing. I think actually the first stock I ever bought was Enron. So not exactly, I was a freshman in college, and the financial advisor told me Enron was a good stock. So I was like, well, I've been taking all these finance courses. I should probably invest in a stock and learn how it works. And that was a good first choice.
That told you a lot about Enron and about the profession of financial advisors too. We learned a lot from that whole episode, didn't we?
I did. And also learned a lot about don't just listen to people, actually do your own work. But honestly, it was, I think I learned about investment banking sometime in college. Actually, I think my mom at the time was a headhunter, and she had just been placing a fair amount of investment bankers. So she told me about what it was. And I remember I applied to a ton of internships, between my junior and senior year, and got none of them. And I couldn't understand why. I had a good GPA, was, an athlete in college, had pretty much the resume that I would have expected to have gotten at least some internships, and got none. And I think it was largely because I was a biology major. So all I did was I remember all I did was switch my major from biology to finance and economics, and nothing else changed. And even my course load didn't change because I was taking all the same courses anyway. I just changed it. And then all of a sudden, when I applied for full-time jobs, I got, 7 or 8 offers, in New York and Chicago. So little,
Interesting.
a little weird, right? Sometimes those little life, quirks are sort of out of your control. And obviously there's, back then, I know people now would look at something like Lehman Brothers or Merrill Lynch and say, well, that's a terrible company. But back 20 years ago, that was the cream of the crop. I mean, to get a job at Lehman or Merrill or Bear Stearns, I mean, that was a big deal. And it was competitive. So obviously they have to do the screening process somehow. And one of those screening processes was clearly just your focus and your major. So sort of interesting that just a minute little switch like that just on a resume made a big difference to me. But ultimately, when I got to New York, that kind of shaped where I was going for the next 20 years plus.
Yeah. Before we jump into your first trade, what was your initial impression when you started working at the banks? Was Lehman the first stop, the first job? What was your sort of, impression of it all?
Well, even before I'll take a step back. Even before I got there, Washington University in St. Louis did, that was a very good school, but it wasn't your Ivy League where they had all of New York, knocking down your door. So at WashU, I was actually one of the leaders of a group we called Wall Street Week, where we just put 30 or 40 kids together who wanted to get to Wall Street, and we basically put resume books together and planned a trip to New York. So I kind of learned about it before even getting there, just talking to some of the MBA students who had already done 2 or 3 years in investment banking or trading, and kind of understood the culture. And in fact, I remember sending resumes and cover letters, actual physical mailed resumes and cover letters, in the late 90s, early 2000s to these banks. And oftentimes the response would be, well, you're in St. Louis. So if you ever get to New York, let us know. And I remember I had to physically go to New York, call all the same companies again and be like, hey, it's Jeff Dorman again. I'm looking for a job. And they say, well, let me know when you're in New York. I'm like, well, I'm actually in your lobby. Can I come up? 2 of the job offers I got were just from being kind of persistent and being a little bit overly aggressive. Physically standing in their lobby, making a phone call, trying to get in for an interview. And I think that carried with me once I got there of, okay, this is the world you're now in. It is about kind of being an alpha, being aggressive, not just sitting back and going from investment banking to then trading and managing, outside client assets through hedge funds. I think it's all sort of the same thing of just, being willing to trust yourself and put yourself out there and not be passive. I guess my interpretation or my experience in New York was kind of a buildup of once I got there, it was everything that I thought. I mean, it was fast paced. It was, all the stories you might have read in Liar's Poker or Monkey Business. I mean, all that stuff was real. It was a fun kind of collegiate environment of young people trying to make a name for themselves, but also very intense, very serious, and really a good way to start your career.
This brings us perfectly into your first trade. And that's one of your best. And that's quitting your job at Lehman to follow your now wife to DC. So tell us set the scene for us. Where were you living? How long had the two of you been together? Like, where were you at this point in your life?
Yeah, so I met my now wife in college. We had been dating pretty much mostly through college, and took a lot of the same courses. She actually went on to become a doctor, as you just mentioned. So a lot of the biology courses and chemistry courses, we were all in there together. But when we both graduated, she moved up to Boston, and was doing some research up there before going to medical school. And I went to New York to work for Lehman. And then a few years later, when she got into medical school, the best one she got into was George Washington down in DC. And that was we went from maybe just a year or two of being apart to now all of a sudden is like, okay, this is going to be 4 years of being apart if I stay in New York and you go there. And I loved my job at Lehman. I loved the people. I liked what we were doing. It was fun. Being in New York was great. And I had a big choice to make, either stay separated for 4 years or make the move. And I ultimately decided to move to DC. I worked for a small firm for a couple of years called Friedman Billings Ramsey before moving back to New York later. And I remember it was pretty funny because I was good at my job at Lehman. I was the ¡1 ranked investment banking analyst 2 straight years. I loved it. Like I said, it was a fun job. It was cool being there. It was hard to give that up and move. And I remember when I told people at Lehman, it was a typical kind of response that you'd expect from most people. They're like, "What are you doing? You're throwing your career away. Why would you go to this small firm called FBR in DC when you could be at Lehman forever?" Everyone said that, this is ridiculous. Why would you chase a girl over your career? And actually one person I remember said, "Is she rich?" And I said, "No, not at all." He said, "Well, that's too bad because you can make a lot more money on your wedding day than you can in your career." And this was really funny at the time to me, just because this was at the time I'm 24 years old and I'm putting these managing directors at Lehman on a pedestal because they're all worth, millions of dollars. And I'm thinking, oh my God, how cool to be. And this guy's saying, don't worry about your job, just go marry rich, which I thought was pretty funny. And that's not what I did. I actually picked up quite a bit of medical school debt when I got married. So it was not a good trade from that standpoint. But I ultimately decided to go down there, and not only was that a great trade in retrospect because of Lehman ultimately going under. Like, who knows what would have happened to my career if I had stayed at Lehman for 8 years right before they went bankrupt. But also just my wife now, we've been married 17 years, we've got 2 children, we got a nice life, but also just the willingness to understand that there's more to life than just your career. Like I said, I was young, I really loved it there. I was making good money. I was good at it, and being willing to kind of put some of that aside for personal gain, was a tough decision. It worked out really well, and it would never have done anything differently. But certainly now it looks like the right thing to have done. But back, 18, 19 years ago, whenever it was a tough decision.
And I think what the person said to you is so interesting. Like, why are you chasing a girl and throwing away your career? Because, it might not seem like that long ago, but in some ways, maybe it still is, but that was really the prevailing wisdom. Like, women have had to make that choice many, many times, traditionally, but it's not very often. It's not asked of men to make that choice the other way around.
Yeah, for sure. And also, I only lived in DC for about 2.5 years before we ultimately moved back to New York, but that was a great experience too. I'd never, I've been to DC just for like a school trip here and there, to see a museum, but to leave New York and go live in DC for a couple of years before going back to New York, that was great as well. I think DC is one of the coolest cities in the world, and to be able to live there, even though Friedman Billings Ramsey, not a very well-known firm, certainly not a bulge bracket like Lehman or any of the big ones that I left. Another place where I met a good 10 people that I still talk to all the time in my financial network came from meeting them at FBR. So you just never really know what those twists and turns in your life will end up doing for you, but certainly a good experience all around.
It's so interesting that you are able to sort of unravel the many different reasons it was a good decision, because, aside from your personal fulfillment, you in a way, the way you describe it, you took a bet on yourself, didn't you? You didn't define your career just related to the company. It was really you saying, I'm going to be able to do this, and make it work no matter where I am, even though you're still young in your career. That's kind of extraordinary.
Yeah, well, I appreciate that. But also I think too, it goes when I decided after, she did her first 3 years of medical school, and then she did her 4th year in New York. When I tried to move back to New York, I realized how tough it is once you get off that track, right? It's one thing when you're on the track and then you get off the track and trying to get back in. And it almost was back to my college days when I had to knock down doors to get back in. That's kind of how I got the Merrill Lynch job going back to New York, was basically knocking down doors, saying, I left Lehman. I came down here for personal reasons. I learned another, aspect of finance being down here because Friedman Billings Ramsey at the time was doing, very different types of financial transactions than a place like Lehman was, and ultimately used both of those experiences to kind of get back into the bulge bracket and work at Merrill and, build that corporate bond trading acumen, and ultimately into investing in debt and equities for the rest of my career.
So your second trade is one of your worst trades, and that's going back to work in 2011 after getting let go by Citadel and having a 1-year non-compete and passing up the chance to travel. I put these in the order that seemed to make sense to me because you sent us over 4. So you didn't travel, you didn't enjoy your life. I think everybody right now coming out of COVID really understands that. So what's happening when this all went down?
So the backdrop here is, like I said, I started at Lehman, prestigious place, kind of took a little bit of that away when I went down to DC to work for FBR, fought like hell to get back to Wall Street when I got the Merrill job, and then went from Merrill to Citadel. And it's like, okay, I got it back on track. I'm back in these big firms, learning a ton, making good money. And then the group that I was in at Citadel, basically unwound and shut down. And Citadel was a very fun place to work. They were very big into, the people there and how you built a group. But then when you left, it was like ironclad lockdown. You can't work for another year. I mean, I talked to employment lawyers. They're like, there's no way you're beating Citadel. If they have a 1 year non-compete, it's a 1 year non-compete. Like, you can't fight it. So I was like, well, okay, well, that's upsetting. So I basically had a choice. This is at the end of 2011, the end of 2010, rather. And I basically had a choice of not working for the entire year of 2011 while still getting paid by Citadel or going back to work. And the backdrop there was, again, I just spent the last 10 years kind of busting my butt to get into these big places and to work and make money. And the idea of just sort of taking a year off, especially after the financial crisis, who knows what the markets are going to look like when you decide to come back to work, was a little daunting. But at the same time, I had just gone straight from college to work, never had really anything more than a 1 week vacation, certainly not, any extended period of time off. And I was like, the idea of maybe not working for a year and traveling and doing some things sounded pretty appealing. But there was an interesting amount of pressure, partly actually coming from my wife and my family who, my wife had just finished medical school at this time. So she's working in her residency at NYU, and, she's working 90 hours a week. The idea of her husband just sitting around doing nothing for a year while she's busting her butt wasn't a real appealing setup for her. But also, I had friends who, were growing up in Cleveland, Ohio, who, some of them had factory jobs. Some of them had, more blue collar jobs. Like the idea of just not working for a year was embarrassing. To be able to say, hey, I can afford to not work for a year because they're paying me to do nothing. My family, my wife's family, hardworking. I mean, her dad worked for the same company for 35 years. And, my parents, divorced at an early age, both worked their butts off. Like this idea of just being like, hey, look at me, I'm going to go jet set around the world because I can, while the rest of you are, working nonstop every day. That was some pressure that I put on myself, and whether they put it on me or not, I felt it. And it was hard to do what I thought was right for me, which was to take a break and to go do some things and enjoy life. I had this kind of internal pressure to just get back to work. And ironically, I ended up taking a job at another small hedge fund a few months later. Don't get me wrong, I did travel a little bit, a couple of trips here and there for a few months, but I ended up going back to work, I think 3 months later. And ultimately, 2011 was not a great year for the markets. And I think I ended up getting paid dollar for dollar the exact same amount in 2011 by going back to work that I would have had I not worked at all. Like the non-compete,
Wow.
the non-compete that I basically violated by going back to work was worth exactly the same amount as I made by going back to work. So, on the one hand, kind of worked for no reason for 9 months. On the other hand, again, I met really good people in that job that I took and had some great experience. So it wasn't a total loss, but I think it's the kind of thing that in the moment it didn't bother me, but 10 years later, when else am I going to have an opportunity like that to travel the world? And, in my young 30s, before I had kids, to be able to do things that, now are 20 years away now, right? I've got to get my kids through college and out of the house before I can do something like that again.
Jeff, we're all working till we're dead right now. As a mother of teens, I my husband and I share your pain. But you bring up such an interesting point, because this idea of of the importance of work, or how much of our identities are tied up in work, or, just the cultural value as Americans. And I don't mean value always in a positive way, that we put on, the definition we give work is really interesting, isn't it?
Well, I think the culture, even just 12 years ago is very different than now, right? Now there's a much bigger push for work-life balance. There's much more awareness of experiences over just work. 10, 15 years ago, you wore your job, as a kind of a badge of pride, right? How much you were working and how hard you were working. And I think that's a hard cultural thing to get past, like you said. It certainly wasn't about boredom. It wasn't like I couldn't have figured out what to do with a year.
Yeah.
I had plenty of hobbies and projects and things I could have done. It really was, like I said, a form of embarrassment or a pride thing of like, you're supposed to work every day. Like that's what you're supposed to do.
Yeah. Yeah. Where if you think about it and you could do it over, do you know what you would have done? Like if somebody came and said to you now, okay, you got that year back, what would be on the list of things to do?
Yeah, I definitely would have done a couple of months of backpacking, just around Asia and Europe. I mean, I've spent a fair amount of time in Europe, but very little, if any, time in Asia. I probably would have done the same thing in South America, but also even just little things of, I live out in California now with my two kids who are in activities and sports, and it's very hard for me to get back to places where my family lives in Colorado and Chicago and Cleveland and Florida. So definitely spending a little more family time would have been nice. And also just, one of the benefits of going to a place like WashU in St. Louis is nobody stays in St. Louis. They all go everywhere. So I've got friends, all over the country and the world. I mean, even just a 3-day trip or a week trip to go see other people would have been enjoyable. So, definitely would have been traveling. I also think, I like doing projects. I like, volunteering, but it's always been very difficult to do when you don't have visibility. If you're always like, well, I can't get into this because I don't know what the next 2 months are going to look like. But if I had just said on day one, hey, I've got 365 days before I'm going back to work, a lot of volunteering, a lot of, maybe learn another language, something like that. Things where I would have said, hey, this is what I'm going to do for this year.
So your third trade, and this is one of your best, is taking a 90% pay cut to leave Wall Street, first for fintech and then to start Arca. So you have this sort of really interesting relationship with Wall Street because you're in and out. And so this is another sort of development. So what was going on in your life at this moment that led you to this trade?
Sure. Yeah, I did have a little bit of a love-hate relationship with it, right? Both in the sense that it was like so gripping to get there, right? This grasp it had on me to be part of this, and the cachet that came with, saying you worked on Wall Street. But also don't forget, I started my career, 6 weeks before 9/11, and a huge recession. So it wasn't exactly a great start to my career. And then, fought my way back, and then the financial crisis happens. So again, it was a little bit of a love-hate relationship. And I think, after Citadel and after working a couple smaller hedge funds where I loved the work that I was doing, but it got to a point in 2013, 2014 where I felt like the skills that I had developed no longer mattered as much in markets. We went from, I loved pouring through balance sheets and income statements and finding the nuance and listening to earnings calls and trying to figure out cap structure trades and event trades and all these things that was what my skill set was. And then we got to 2013, 2014, and it was basically just, what's the Fed going to say next? And it really became boring. It was a very, I remember going through an investment committee one time on an investment, and the answer came out was like, well, who cares? It's just a matter of what the Fed says tomorrow anyway. And it was just like, that was so depressing to me. And I had an opportunity, actually, a gentleman that I worked with at Friedman Billings Ramsey in DC for a couple of years.
There's that network.
There's that network. He started a fintech company, and he and I had stayed close. In fact, he was on a couple different positions throughout Wall Street as well. Sometimes he was a salesman at one point who covered me when I was on the buy side. And he was talking to me while I was working at these hedge funds about this idea he had. And I was, he's picking my brain and I was giving him some information. And then he ultimately decided to leave his company and start this company. And like 6 to 12 months later, he asked me, he said, would you want to come do this with me? And, I didn't really, again, this is back in 2013, 2014. There wasn't really that many kind of fintech success stories back then where that move from Wall Street to fintech made as much sense as it does today. Now everybody's trying to make that move, but, this was still kind of before, you had enough of those success stories to make it like an obvious trade. And I remember talking it over with my wife. We had just had our first child, and he was 1 year old. And obviously, my wife is now, she was a full-fledged doctor now, making money for the first time in her career after a 10-year journey of either paying an insane amount of money for school or making nothing as a resident. And financially, it was like, okay, do we really want to do this? Do I want to leave a cushy hedge fund job where I'm making good money and I've been doing this for a long time and know how to make money? Or do I want to take a chance and learn something new? And ultimately, the person who had started the company, I trusted him a lot, and we'd been friends for a long time. And it was hard. I mean, I remember, having the discussion with my wife over and over again, like back and forth, like, well, do I care about just the next 10 years of just being an easy life, making our money, or do I want to take a chance and try to build something? And in the back of my mind, I was like, well, what's the worst that could happen? If it's, it's going to be boom or bust, right? Either this is a billion-dollar company and, it's the greatest thing in the world, or it's a flop and I'll be back on, back on Wall Street in a year or two anyway. And ultimately I was there for 5 years. So it was neither. It wasn't a huge success. It was successful enough to still be in business, but it wasn't it's not a household name that you would have heard of. It's not a huge success. But I was there for 5 years, and it was during that time, I think, that one, I kind of gave up this just obsession with money. I think part of the Wall Street culture was just, you have to make more than the guy next to you. You have to just keep working till you get that huge bonus and get that second house or do all these things. And taking the huge pay cut to go work for an uncertain startup kind of dislodged that obsession with money. And gave me more of sort of a passion for just doing creative things and doing interesting things. But two was, like I said earlier, this myopic kind of debt and equity investing, you really start to just talk to the same people all the time. You go to the same bars and restaurants all the time. You're focused on the same factors all the time. And even though I was, well versed in finance and economics, having, had a 12+ year career at the time, I, had taken the CFA and passed all 3 tests and all that stuff, like the real world experience of finance, I was really kind of missing. And once I went over to this fintech company, it was like, okay, now I'm talking to, small financial advisors in Minnesota, and I'm talking to, small RIAs and talking to, research firms, and just sort of a little bit of a wider net, I guess, in terms of just understanding what the whole financial ecosystem was. And more importantly, it was the first time I'd ever worked with developers. We had 10 full stack developers working on this project, and they all had a completely different background and culture and knowledge set, and kind of understanding where they were coming from finance and tech versus where, myself and the other ex-Wall Street guys were coming from. It was almost a little bit of the jocks and the nerds kind of dynamic, where it was like we had to learn how to work together, even though we had this kind of natural culture clash in terms of them being these, brilliant artists and us being these egotistical, money obsessed people. And figuring out how to work together with them and build a company was a really good experience for me, and also allowed me to move out of New York, because a couple of years into it, I was still working in New York, working for this company. And I remember my wife and I for years, we were kind of hinting at, like, do we want to stay at New York forever? We just had our first, child. Do we want to raise children here? Neither of us were from New York. It's not like we had any ties there. It was just because of work that we were there. And I remember very vividly, one day I was like sprinting from Penn Station to Times Square. Like really aggressively walking fast, almost knocking people over. And I remember being like, what am I don't even have anywhere to be. Like, why am I moving this fast? And it kind of dawned on me that New York became so entrenched in me, for no real reason. I wasn't in this kind of hustle and bustle Wall Street life anymore. And yet I'm still operating like everything has to be done immediately or it's not going to get done. And my wife and I were like, well, where would we go? And we started talking about different places that we might want to live. And ultimately we just moved out to Los Angeles, again, kind of on a whim. We had no family out here. It was just, we'd always both liked California and wanted something new. And I moved out here, and ultimately a few years later was when I started Arca and got full-time into blockchain. But it came from this fintech experience, because I was talking to developers who were mining for Bitcoin, and Ethereum, and were understanding open source code and using GitHub every day. And then when I moved to LA, it's like every single person I met out here was in crypto or blockchain in some capacity. The difference is, New York, everybody has one job and works 100 hours a week. In LA, nobody has a real job. They all, have 17 different projects they're working on. And, one.
Which is interesting. It's just such an interesting difference in culture.
Yeah, for sure. It was a very different culture for us. My wife as well, right? I mean, she went from working in the hospital in New York where it was just every second, every minute to, moving out here where it's like, yeah, I'm a doctor, but I also play golf and go sailing, and everybody has like different hobbies because there's so much to do out here. So anyway, I mean, just that one little decision of being willing to kind of rip the Band-Aid off and leave Wall Street on my own to start and work in this fintech project led to a move to Los Angeles, a career change. I mean, all these different things stemmed from that. And it was all, again, from being willing to just take a chance on myself and not be just tied down to this persona that I had built through work.
Yeah. I like the way you say that one little decision, because it's a massive decision. It's interesting. And I want to talk about both your, as this sort of couple, your ability to take risk is amazing. But when you say you dislodged that obsession with money, it is, I mean, it's hard to sort of understate what a big change that is, because you're finally at the point where she's making decent money, you're making decent money. I mean, that can set you up for life if you combine your two salaries, especially as you start a family. You got college looming out there. I mean, I could see why you went back and forth about it. That had to feel like an incredibly risky decision to make, to give that up.
Yeah, it definitely was, and not even just money, but also just the interrelationship dynamics of my wife and I. For over a decade, I was the one who made the money. She was the one who was working towards something, and had debts, and all of a sudden that dynamic flipped, where now she's making the good money, and I'm the one who's basically the liability. And that was a big shift in kind of our relationship as well. Not for better or worse, but just different, right? It was just a different dynamic.
Was it weird?
Not in like a power dynamic or in a, sex dynamic or anything of a male female or anything, but it was weird in the sense that like part of my identity was being the guy who brought home good money, and her identity was never being the breadwinner. So it was definitely weird. And it was, I think change in general is usually good. Even if doesn't feel like it in the time, but just, being able to be on both sides of that, definitely made, our relationship better in terms of understanding each other. But it's definitely weird.
Yeah. I think what you said about identity is really important though, right? Because I think that we don't realize how much some things are getting baked into our identity. You think of yourself and it doesn't really feel that different as you go, but over the years, there's definitely things that are informing that. And then when suddenly you make a pivot like that, you're kind of left sort of figuring out really who you are without some of those trappings, right? And so some people, that's a big transition.
Yeah, it is. And it's, it's not obviously just me. I mean, everyone goes through that, right? When you've done something for as long as you do it, eventually it just becomes part of who you are. And it's hard to see yourself doing something else. And I'm not 100% sure which is right or which is wrong. I mean, I know people who've worked in the same place for 20 years and they love it. And I know people who take a new job every 2 years. But there's no question that the longer you do the same thing, the more it kind of just becomes who you are. And being able to see past that or see another world is hard, but can be often rewarding. And for me, certainly it was.
Did you learn about skills that you had that you didn't realize? Because you're transitioning from the money, transitioning from the breadwinner, transitioning from being in the dynamic of the hedge fund world, which you'd always known. You've got to work with these, as you said, the jocks and the nerds, but work with these people who have all this expertise that you don't. I imagine it must have been a pretty big learning curve on the tech front. What skills did you have, and maybe what weaknesses did you recognize that you didn't realize?
Yeah, well, one of them, it's funny because the thing that popped in my head when you said that was I didn't know how to take a lunch break. I had worked for 12 years where I never took a lunch break. It was like, get a sandwich back to your desk and keep trading. And, when I worked for the fintech company, it was like, people just took a lunch break for an hour and sat and talked and went to lunch. I'm like, well, what is this? Like, aren't you worried about getting back? They're like, worried about getting back to the desk for what? It's not like it wasn't related to the markets. It wasn't like you had this, thing to get back to. It took me a long time. It took me a couple of years to actually figure out how to eat lunch and leave my computer for an hour during the middle of the day. But also the big thing was, I had mentioned that my son was now 1 year old when I made this move. Every single person in my life on Wall Street, they took the train at 5 a.m. and they got home at 7 or 8 p.m. I mean, they never see their kids Monday through Friday. I got to see my son every day. I didn't go into work. I would get up early before he would wake up and I would do some work from home. Then I would spend an hour and a half with him, before the nanny came or before he went to school when he got older. And then I'd leave work at 4 or 5 o'clock and go home and be with him for a couple hours and then maybe go log on at night and do some more work later. And again, that was a very different lifestyle than the, 6 a.m. to 7 p.m. job that I had for, the first 12 years of my career. And what's funny is, my son is now 10. I have a daughter who's almost 6. I still have that same schedule now, even though I'm back running money. At Arca, we have multiple different investment products, including hedge funds. So in some ways, my life now is back to what it used to be. But because blockchain is 24/7, because crypto is 24/7, there's no 1 hour that's more important than any other hour. It's not like the stock market that's open, for a set number of hours every day. So I still have that exact same schedule today.
Yeah. Yeah. And some of that is it's just habit, right? I mean, like we found through the pandemic, there are other ways to do things, but it's just that, well, that's the way Wall Street operated. And a lot of it was political and FaceTime and whatever, it was just the way things had been done. It didn't mean it was the way things should be done or could be done.
Yeah, for sure. And then I think from a work standpoint too, I mean, it's the creative side, was something that I think I always had in me that was sort of, muffled when I was on Wall Street, because Wall Street's such a machine. It's like, you do this, then you do this, and you do this. Your presentation has to look exactly like this. Your spreadsheets have to look exactly like this. And then you go to, a smaller firm and it's like, start from scratch, build it however you want. And the ability to do that, really started writing a lot more, which I've always enjoyed doing, but never really had an outlet to do it. And now, for anybody who may or may not know me, I mean, I've been writing a crypto blog now for 5 years called That's Our Two Satoshis. I do it every single week and it's not even a chore. It's just like part of who I am is just writing. And I, those are the kind of skills that sometimes get hidden when you're kind of working for a big machine, and when you have a little bit more of a free floating job or company, you try things and they may or may not work, and you kind of start to tap in a little bit more to your skill sets.
Yeah, or find that you have them and they were just not nurtured,
Exactly.
And especially the way the world is moving. I mean, I think that creativity, or at least the ability to sit at intersections, is so important. I mean, for me, some of the most successful people I ever talked to have that ability, but, it's only because they kind of wrenched it out of the system or found a way to get it. The system or the organizations tended to sort of stifle that, which is kind of interesting. Do you and your wife think of yourselves as risk takers, or did you at any point when you were making these humongous decisions?
I definitely consider myself a risk taker. My wife is the exact opposite, very risk averse. Her family is very risk averse. My family is very risk averse. I'm sort of the lone risk taker of the people that we know. But definitely these decisions were certainly easier for me than they were for her.
And yet she gets there.
Yeah, she gets there. But I also think it's always interesting when you're making decisions on behalf of more than one person, right? When you're making a decision on your own, certainly you can make the right or wrong decision, but at least you have only yourself to account for. But when you're doing it on behalf of a spouse or kids, or it's a lot more impactful. So I think my attitude about it is, no matter what you do, you'll make the best out of it, even if it turns out to be not the best decision. So, I like to take those risks and make those changes and see what you can do with it. I know some people, the idea of it just makes them cringe. And I think my wife is one of those people, but we've been able to figure out how to do it together.
Yeah. We have a no regrets policy, right? At the end of the day, like if you're going to be wondering or have regrets, then at least if you try, you have to have, you seem to be quite willing to face failure as well. Because to make big decisions like that, you've got to be willing to understand that they may not work out.
I think so. I think part being a baseball player, all my childhood and through college, I think that helped as well. I mean, baseball is a game of failure. The best hitters in the world only get on base 3 out of every 10 times. So I think that's a game of failure. It sort of teaches you that failure is okay and how to bounce back. I think I've always had that attitude, whether, it's like a baseball closer who blows a save and still has to go out there the next day and do it, or the cornerback in football who gets burned for a touchdown and still has to go right back out there and do it again. I feel like that when I write. I write every single week. Some of the things I write I know are terrible, but it's like, I'm not going to agonize over them and, spend 17 hours fixing it. It's like, all right, well, whatever, I'll spit it out and I'll come back next week and write a better one. So I think, that's that attitude I've had with me my whole life really is, don't worry about failure, do the best you can. And then, you're going to get another shot next time anyway.
So let's get to your final trade, and that is one of your worst. And this is interesting because it's kind of, at least on the surface, a departure from some of these more like life-centered ones. And that is owning a 20% position in Trump bonds in 2008 when you thought an asset sale was coming up. Trade worked, then it didn't. So why does this one get on the list? I'm interested.
So this one really kind of defined my investing prowess, in the sense that I was a young, hotshot, 20-year-old trader at Merrill. They gave me a lot of capital. This is before the financial crisis where, it didn't matter how much money you're using. Money was infinite at Merrill. Just, as long as you could make money, they'll give you as much as you want. I was, 26, 27, 28 years old, managing hundreds of millions of dollars for Merrill. And I remember I took a very large position in Trump bonds. This was back before Donald Trump became who he is today, back when he was just a casino mogul or whatever else he had going on. But he had 3 properties in Atlantic City, and there was a bond issuance that was tied to those 3 properties with very tight covenants that if he sold any of those properties, he had to use the proceeds to buy back the bonds. And it was becoming pretty evident that he was trying to sell one of those 3 properties. So I took a very large position in the bonds. They were, high yield bonds, they were single B bonds trading 10, 11, 12%, something like that. And I remember when news finally broke that he was looking to sell one of the 3 properties, the bonds shot up like 5 or 6 points. And it was like my first big win. I'd made a couple $1 million on one trade. People are high-fiving me. And then I didn't sell enough of them. And I remember not sleeping very well that night or the next night or whatever it was. And then that day or the next day came out the headline that the asset sale wasn't going to happen and the bonds got crushed. And I lost a ton of money. So basically in the same week, and again, I don't remember exactly if it was like a day or 2 days or 3 days, but in the same week, I had a huge win and a huge loss. And both of them obviously caught the attention of my bosses and the risk managers and everything else. And I remember a very senior trader at the time, shout out to Danny Mena, if he's listening for whatever reason. I remember him, he was always a very stoic, very unemotional trader. And he was one of the people that I had learned from. And I remember he came over to me and said, it wasn't about whether you were right or wrong. It's about whether you should have been taking that much risk in the first place. And it stuck with me because what he was basically saying was, independent of the outcome, were you too big? Did you think through all the risks that you were going through? And I remember that, that week or that month, I remember I went back to my spreadsheet days and I started to build a model on, well, how do you actually think about risk reward? What is the right way to size something? And I built this model and I still use it today. I've adapted it over 15 years, where it's 100% just based on get all of the information that matters for an investment. Get the timing, get the correlation, get the upside downside ratio, get the liquidity of it. Figure out all these different factors that go into whether something is going to work or not, and figure out what is the right size for that position to be based on all of those factors. And ultimately, that was a huge mistake that I made, not just because I lost money, but because it put me all of a sudden on everyone at Merrill's radar, right, as a gunslinger. And that wasn't what I was designing to be. I didn't want to be a gunslinger. I wanted to be a guy who just was trusted to make money every year. And the big win followed by the big loss, even though the net P&L wasn't actually that big of a deal, the way I got there, right, the path it took, the huge up and the huge down, definitely, raised eyebrows in not a great way at Merrill. And it took me a lot of years to kind of understand that and understand, okay, how do you think about this better, right? It's not just about how much money you can make, it's how much risk are you taking to get there. And I know there's all kinds of metrics in finance that look at risk adjusted return, but it's a lot more than just academic. It's about really understanding, everything that could go wrong. And I've dedicated my career to that. I've written articles about it. I've built systems and processes around it. Even little things like when I talk to my kids, it's like, okay, yeah, like the likelihood of getting hit by a car is very low, but that one time that you don't look crossing the street is going to be a risk that you're not willing to take. It's funny because the last segment you're talking about how I'm a risk taker, and I am a risk taker.
Yeah, that's what I'm listening to this. It's so interesting because it seems at odds.
But I am a risk taker, but a very calculated risk taker. Very, very methodical about what is the risk I'm actually taking, and is that worth it? And that doesn't mean I won't take a big risk, but I'm definitely focused on the downside more so than the upside when I'm doing that.
That's so interesting. So chronologically, this kind of fits a little bit earlier in the trades we talked about, but I'm glad that we did it last because I think it's the kind of culmination, because you did take these big risks, and a lot of them in your personal life, which obviously the stakes are just as high, but it's a little bit different. But did you apply, do you think you've always been doing that? Kind of applying all the information, plugging all the information you could into those decisions? Or is that really after you had this trade that you became really front of mind? That was much more articulated front of mind.
This one definitely changed how I thought about risk. I think I always had the willingness to take risks. I always had a higher risk tolerance, but never in a methodical way until this event, trading these Trump bonds, where I started to really calculate, what if I'm wrong, and is it okay? And I think a part of it is, you take like a move from New York to LA for example, right? I mean, that's a big move. That's a big decision. Even though I could paint all these pictures of like what the upside is, the cost of living is lower, the weather is better, the lifestyle is better. But there's also what is the downside? And in going through that, especially with my wife, it's like, what is the downside? It's not that big of a deal. If we don't like it, we can always move back. And things like that. Like, I always think about what is that downside. And most of what I've realized is that a lot of the things that we fear in life, or a lot of the things that we worry about, in terms of downside, oftentimes isn't that big of a deal. And I think that's probably the biggest attitude for me, is it's not that I'm willing to take less risks. It's more, a lot of times the downside risk that we fear and that we worry about so much really isn't that big of a deal. And I think I've lived my life that way, of not kind of fretting over small things. And being able to quantify exactly what those risks are.
So is that understanding risk, or is that understanding fear, right? Because if they're not that big of a deal, what are we afraid of?
I think it's a little bit of both. I think probably more than anything, it's about articulating, right? You get things that, it's about being able to accurately articulate what it is that you're worried about, right? For an investment, it's being able to accurately articulate exactly what the downside of the investment is, or what could go wrong, or what is the probability of this, black swan event. And with life stuff, it's the same thing. It's like articulate, like, okay, what are we actually worried about? What, are we worried about failure? Are we worried about hating where we are? And trying to spell it out helps you evaluate it better. And I think, that's an attitude that has stuck with me really since that Trump trade. Is not just being so myopic on this upside scenario and just, shooting the moon with this huge idea, and instead kind of saying, okay, let's, what could go right? What could go wrong? I mean, honestly, going back to that specific trade, I mean, I think I owned 35 million bonds at the time. I probably, if I could do it again, I would have owned like 3 million. Just because, clearly I misread the volatility. Clearly I misread the binary options. And it's like, that's the kind of big shift, that has shaped a lot of what I've done throughout my career and my personal life is only taking those big swings when you really clearly understand the upside versus the downside.
Yeah. Handy to have as an entrepreneur, because that sort of thinking, sometimes it is all about just, shoot for the moon, fake it till you make it, especially when you're talking to VC and you're fundraising. Nobody wants to, you can get caught up in just trying to emphasize that upside, I think.
Yeah, I mean, even working for some startups, which I have too. Even Arca, when we started, was a startup. I mean, even little decisions of like, do we want to go down this path and this business idea? Well, if it's going to take 18 months and a couple $1 million to do, even if it has high upside, maybe that's not a risk worth taking versus this path over here where, we'll know in 2 or 3 months whether or not it's going to work. Right. And it's that ability to kind of evaluate and think about like, yeah, a path A might be the home run path, but it also could put us out of business. Whereas path B, might only be a single, but it might lead us to raising more money and giving us more longevity to do the bigger things.
Yeah. Last question. What would your advice be to either investors or people who are a little earlier on their journey?
Yeah, I think you touched on it actually more than me, but everyone kind of knows the value of a network, but being willing to maintain that network and talk to people is really important. I used to just read a lot and not talk to people, and I realized how quickly I would be dismissive of other people's ideas because I didn't read it in a book. And then later in my career, I was like, actually, I want to hear the person who disagrees with me. I want to hear the person who has a completely opposite viewpoint of me and hear them out and learn from that. And it takes effort to do that. It takes effort to just pick up the phone and call someone or send an email or a text to just stay in touch. And, I'd say most of my best investments and most of my best decisions in some way, shape, or form came from talking to people or just reaching out and hearing the other side of things. So that would be my advice: is be willing to take chances on yourself, be willing to do things, but do it with the backdrop of knowledge from other people and using the people in your life who have done things or haven't done things to help guide and shape your decisions.
Well, Jeff, I'm so glad that you took the time to talk to us today. This was so much fun and a lot of fantastic wisdom in there. Thank you for sharing your story.
Absolutely. Thanks for having me.
All right, that's a wrap on this week's edition of My Life in 4 Trades. For more on the series, visit realvision.com/My Life in 4 Trades. Make sure to use the numeral 4.
Hey everyone, thanks for watching. If you like this show, you're going to love Real Vision Essential. At Real Vision, we talk to the most successful investors in the world and deliver videos that make finance interesting. It's all about helping you become a better, more confident investor. Now, we could dress that up in fancy marketing buzzwords, but it's really that simple. Oh, and right now, you can join Essential for $99 for a full year instead of the usual $239. Visit realvision.com/essential99 to join the Real Vision community. That's realvision.com/essential99.